Hi, guys, and welcome to the 47th episode of the WTW podcast, where we talk about the weekend markets from a trader's perspective, what to focus on, and what to ignore. So let's begin. Crazy week. It didn't start off that week. It didn't start off that strong or weak or anything. Here we go again. S&P 500, SPY. Red arrow denotes Monday, Tuesday, Wednesday, Thursday, and then big red candle Friday. Trump opened up his big mouth again. Boom, down. But I guess it's a good change of pace because, for so long it was so boring. Like nothing was happening, paint dry all the way up. And then, big down day on Friday, okay? Let's switch it up a bit. Of course, we usually talk about the technical picture first, but let's talk about the macro first because there really is no macro this week. Government shutdown, so nothing is happening. Okay, so let's just move on to the technical picture. Get rid of this arrow. We're going to keep this short and sweet. Technical picture, despite Friday's destruction, still bullish. It looks like it's violated this low here, and it was very vicious, this move. Let's put on some moving averages. As you can tell, we're closing in right on the 50-day moving averages. Red one is 50. We've destroyed, went right through the 10 and the 20, and we're right at the 50. Okay, still bullish. You're still trading above the 50. Still a series of higher highs and higher lows, unless you want to count this one. Nothing has been violated yet. And this entire move is due to Trump tweeting that he's thinking has done it. He's thinking of putting tariffs on China, okay? So the market fell off hard, viciously high volume, okay? Still bullish though, okay? You have to keep that in mind. This is actually, I keep saying, this is actually, I'm happy. As a bull, you should be happy because this destroys all the overbought conditions, if you will, and all the positive sentiment, and it destroys all the sentiment and resets everything down to zero on high volume. As you can see, the classic adage, the market takes the stairs up, and today it took the elevator down. We had a 2.7% drop in the SPY in one day. That's huge. Okay, that's a big move. Okay, still bullish. Let's not forget it. The technicals are bullish, okay? Until something bad happens. Maybe close under the 50 and you see some other bad news happening, okay? As of right now, we have technical bullish setup, although it does feel very bad, okay, with high volume. So, we can check the previous point here. We had like a 2% drop, 2.5% drop in a couple of days, but then rehashed. Okay, this was the job support that was very bad. Then nobody cared. And on high volume as well. Okay, so as usual, let's see how painful it was by checking sentiment. Okay, and the first thing we look at is the fear and greed index. Do you remember last time, my friends? We were at neutral here, maybe greed or neutral. This week started off being around the neutral level, and it dropped all the way to fear and almost extreme fear. 4 more points, we're at extreme fear. This is incredible. With the market down just 3% from highs, we have fear and almost at extreme fear. Like I said, this is exactly what you want to see in a bull market, okay? The momentum is in fear. The stock price strength is neutral, fear here, extreme fear, volatility, safe haven. Everything is almost at extreme fear and fear. And like the put-call ratio, which is lagged, is at greed. I'm sure after today's action, a lot of people were buying puts, as is evident from here. And if you check out the 10-minute chart here, you can see like slow drift. Let's do it right now. You see this is the 10-minute chart. You see like slow drifts down and the final capitulation on the last day, on the last 10 minutes of the S&P 500. Okay, this is like people buying puts and market makers having to sell stock to delta hedge, so that puts more pressure, okay? But when there's a capitulation moment, it usually tends to reverse, okay? And this move happened all because of Trump. So if he comes over the weekend and says, well, I'm thinking about it, maybe I spoke to she and something good happened, all this gets unwound. Okay, all this gets unwound. So let's go back to the daily chart. It looks really bad, still on the 50, okay, with this getting right at the fear. And what about the AAII investor sentiment? Now this is a little bit different. We're getting more bulls coming in, but still a lot of bears. And I guarantee you next week, this will probably, if the market doesn't rebound and stays at the lows, this will be much higher, because this is a longer term thing, okay? We just had 4 weeks of bullishness with still a lot of bears in the game. It's not enough to really make people go all in on the market. You need to have extreme bullishness, like these levels are good, but with very little bears in the game for like 4 weeks, 5 weeks, 6 weeks. We have to solidify the ultra bullish sentiment. Okay, and we didn't do that. It was just a little bit. Okay, so, and look, you can tell here people are still maximally fearful after just a 3% or 2.6% drop, let's say 3% from highs. I mean, this is not what you want to see if you're a bear. Like, you want to see this as a bull, but as a bear, no. Especially this should be very worrisome to bears. I mean, we're getting close to lows, okay? So another thing that we should look at to confirm all this is the VIX, okay? And in the VIX, you see a massive spike to 21.6. We've had this before. Look at it around here in August, okay? We had another August 1st. Massive spike, okay? This is even higher. We have massive spikes, a couple, 2-3 days, and then back down to a slow grind. This means that the market's slowly grinding higher. Up a little bit of fear, slowly grinding higher. Up a little bit of fear, slowly grinding higher. Up a little bit of fear from highs, it can slowly grind higher over time, okay? Yes, historically speaking, October tends to be a bad month. Not always, but, more often than in other months. However, we could get this, but it also sets up a big rally towards the end of the year for Thanksgiving on Thursday and the Santa rally on Thursday. Thanksgiving in November, Black Friday and all that. And December, we usually get a Santa Claus rally. So this is playing out classically, where you have the VIX spiking, and then, I don't know, you could have another day of a spike. We don't know where the spike goes. Can we have another tantrum here? I don't think so, because we've seen that the tariffs aren't really that inflationary and don't really do that much damage. Who knows? Like, to me, it just seems like all of the evidence on this down move, on this elevator down, let's get rid of these moving averages, see cleaner. All the evidence here with the sentiment still supports a bull market. You still have a lot of bears coming in, okay? And again, I'm going to say it again, it's not enough time to really have people euphoric in the bull camp. You still have a lot of bears out there. So yeah, I would be worried as a bull if we were, coming from extreme greed and this move just dropped it down to greed, or from greed and we went to like neutral, okay, which means you would say there would probably be more downside, okay? And this, I mean, with a lot of bears, these guys could easily pump up next week. You don't know. So for me, as a bull, you should be happy. You should be happy. You're getting a reset. You're getting people buying puts. You're getting market makers adding to that fuel by delta hedging, so bringing it even lower, and then people buying more puts until people have had their fill on buying puts, and then it goes back up. Okay, so to me, like, let's see, I also brought up here the bar charts put call ratio for the S&P 500, okay? And as you can see here, these are the days, the expiration days. We have 0 DTEs. We have options on the SPY for every day expiry, okay? And as you can see, this is today on Friday. The put option open interest is at 624,000, and the calls are 200,000. So there's a 3-to-1 put call ratio. So a lot of people were buying puts, okay? So here, this is the important one right here. On next Friday is where we have options expiry. We have a lot of people bought the October 17th expiry puts. And look at the ratio is 2-to-1. You have 1.4 million contracts of puts, only and half of that in calls. So people are loading up on the put side with the volatility increasing here, with a VIX at, what was it again? 21.65. Okay, so people are loading up on puts. I don't blame them, okay? But the thing is, they're doing it now. They should have been doing it before when it was super cheap, but they're doing it now. I don't know. Human nature, human psychology playing before your eyes, okay? So, like, what do you expect to see when you have this kind of drop in the market? Well, let's go to the last section of this WTW, which is usually things that interest me. And what interested me is that, well, you have gold here maintaining its highs. You should expect to see that. Gold is still at 4,000. You should expect to see that when the market goes down, okay? But what it really interests me is the silver market, because silver was up today, up almost 2%, okay? It's at over $50, okay? What you should be looking at, I mean, you shouldn't see this. This is an asterisk. Usually when the market tanks, SPY tanks by 3%, silver gets smoked by at least 3%. Okay, it goes with the market. This time, nope, something else is happening. So you're seeing the silver market hold up where it should be tanking. The gold market is bid, as it should be, while the market is down. Okay, so this tells me that something good, if you're long, or bad if you're short, is happening in the silver market. I also wanted to mention, like, let's go to the monthly chart of silver. I mentioned this before, okay? This is a monthly chart. The previous high is at 50, okay? If we get a monthly close above 50, this is very, very bullish, okay? We haven't had that in a long time. We've never had that. We have, let me reiterate, if it closes above 48, because this is the close, the highest close was 48, okay? If it closes even here, it's still very bullish for the month, but we have to wait until the 31st. This could tank and it could be like another candle with a huge wick like this one, or back in the 80s. Remember the 80s? Huge wick and back down again, okay? But that was the Hunt brothers. This is much more different. So silver not only impressed me today, you see a bifurcation, that today it was up when everything else was down, which is highly, highly unusual. The monthly chart should also be looked at as another indicator of the strength of silver going forward. And it could be long lasting. I don't know. So SPY, that's a monthly chart. Let's go back to the daily. So let's reiterate. Still bullish, although today was an opportunity maybe to go long. Okay, you had the moving averages holding, okay? Even though this looks like a knife through butter, it's still holding the 50. We have fear almost in the toilet. I mean, not fear, sentiment almost in the toilet, with fear and getting to extreme fear. I would love for it to get to extreme fear. Love for it. I would love for it to undercut the 50, play around here, and then go back up again. Okay? And sentiment here is bullish, yes, but still a lot of bears, not enough to take it down. So, and of course, the put-call ratio is still at, for the day, it was at 3, and for the month, which is the most important, is at 2. So all of these things put together leads me to say that although today was bad, it's still very bullish and should be looking to go long. So looking forward to next week, actually. I want to see exactly what happens, and I'll talk to you guys soon.